So anyways, hey, good morning, everybody. Today is Monday, July 13th, 2015. This is your daily Forex trading strategy session. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com, an ECN that allows you to trade Forex, energies, metals, indices, and binary options. Today is a Monday, so we'll go for the commitment of traders report, we'll review the calendar, and we'll do some technical analysis, and we'll do that in 90 minutes or less. Should be a good day. Thank you to Forex.today for being our hosts. Muy bien. Let's get going. So anyways, let me remind you that trading and investing is risky, not appropriate for everyone. Your past performance, good or bad, is not indicative of future results. So please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Remind yourself every day this is a get-rich-slow scheme. When asked in the middle of a press conference, is the most powerful in the universe, Einstein responded with compound interest. And Forex is no different than quantum physics and quantum mechanics. Grow your account size, lower your leverage, focus on the long term. Cool. All right, so it's a Monday. Well, first of all, Mondays we could talk about gaps. We had some gaps. But who was with me at the FX Street webinar on Friday? Yes. Our trade plan, pound yen had moved many hundreds of pips. It was very, very elevated. And the plan was to let it come down. I guessed at that time down to this area, as you can see. But the idea was, and let me move this here. You can't quite see it. Oh, here it is. There it is. There's the guesstimate on the pound yen. And what I was doing here was kind of looking at this zone, okay? Now you'll notice it went up and hit the monthly pivot. Once again, confirming that traders and other market participants, besides traders, tend to use pivot points. Look at that. That's the monthly. So what did the pound yen do today? It gapped down about 150 pips and went from 89, we'll call it 89 and a half, right? 89 and a half to 90 and a half to 91 and a half to 92 and a half. Up 300 pip today on 100 and something pip retracement. Pretty close to the plan I outlined on Friday. Hey, you're welcome. Bravo, 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 bravo. But you understand what's going on though, right? Higher high, higher low, higher high, higher low, higher high. Genius, genius, genius. That's funny. It's so funny. Every day I hear about the Greek news. You know, Greece this and Greece that. And I always have that voice in my background. Genius. Thank you, Germany. War repatriations. It's the Greek mind. Germany, it's run by a woman. Anyways, so it's so funny. So we got a new deal, huh? Great. Still needs to be voted on. Still needs to be hashed out. Blah 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 blah. So just continuation, blah, 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 blah. Cool. Nice moves in the end, though, huh? Nice moves. This is what you wanted, right? This is really nice volatility for this time of year. We've been blessed. So I hope you're taking advantage of it. Euro dollar move quite nice. But you know, my favorites are these yen pairs. Like, let's take a simple one here. USD yen. Right? Beautiful again, beautiful pullbacks. You can see we clearly highlighted where we were or where support was or could be. Okay, look, maybe you marked it like this. I mean, you're splitting hairs if you don't think that touched, right? Zoom in, and there's the gap. Gap fills fairly quickly. Did anyone take advantage of all the gap trading I've done recently? I have probably 2 or 3 videos. I did a special webinar after the Greek vote, specifically to trade the gap. I mean, we've put a lot of time and effort into this. Right, here's one. Closing 150 pip gap. Oh, but that was last week, right? Or the week before. I guess last week. Oh, Wayne, that's so long ago, right? So we've put a lot of time in there. I hope that you're paying attention and you're staying focused, right? It's not typical we get so many gaps and such large gaps, but it happened. But notice that this is basically it gaps off of our support area. And look at the end results. Pretty nice stuff. Now, let me ask you, are you bullish on the USD yen? Is this something that you want? And if the answer is yes, then you kind of need to be ready for these. Right? What's the message been of late? That you should know on Sunday what you want to do on Monday. You should already be walking to your charts saying, "Man, I hope I can buy this USD yen today." And if right, I mean that's really where we should be at. You may not have completely decided yet because of this channel. You could say, "Well, I haven't measured it as going up yet." But it seems to me the trend is up, right? On a 4-hour. What do you think? On a daily chart? Talk about patience and discipline here. You see this where it all started? No, not that one. This one. This one in here. This whole area right in here. This is what happened last summer. That's what happened last summer. Lowest volatility in the history of Forex. Look what's happening this summer, right? Beautiful difference, isn't it? This was a fabulous result, though. The reason for it is I prepared everyone for months for this move that happened on the 3rd week of August, and it happened on the 3rd week of August when our boats were already loaded. Something like 17,000 pips. Das ist gut, ja. Lots of consolidation now, a new breakout. So that's kind of where we are, and I just want to put it in context. You know, this is good. So the question is, how are you measuring this area here? Well, if you see in this part, this is what I had measured for you several months ago to watch this area's potential support. You can see it went a little lower. But nonetheless, would you consider this bottom to this top a breakout? Okay. Again, this is something that you need to do for yourself. You need to look at that and say, aha, this is a breakout. Okay. What do you do? What's your strategy after a breakout? It's probably going to come back near the old resistance, right? So in that case, a breakout is a trend. A trend trade needs a friend, needs a fib. And the general idea is down, up. Is that how I've taught you? Is that a fair representation of what you know? Okay. That's why you need to print out your charts, make decisions, have it ready, have it in your mind. I hope it goes up. I hope it goes up. I hope it goes up. Right? Because you've already made this decision where we are. Now, yeah, it did come down a little lower. All right, well, that just kind of changes the velocity of which you think it'll go up and maybe the elevation to which it will rise. But okay. It's generally early in the heat, based on previous year's price action history, which remember, past performance does not predict future results. But based on what's happened in the past, it's a little early in the year for the big move. But you know, this year's different than the last because we have things like the issue with Greece. So maybe market participants are fine with it, and they're in a situation of they've already dealt with it, and they're moving on to other trades. They've already rebalanced and repositioned their portfolios, so on and so forth, and they're not really worried about it anymore. So now it's game on, right? There's some pent-up sort of trading interest, whatever. People want risk on again. They figure problem solved, let's move on. So this year isn't last year. I still would like a pullback and long, but we may find that this is the low of the second half of 2015. Right? Are you putting your trades on that kind of scale? Are you saying to yourself, at the end of 2015 we'll be approaching 130? Right? What do you? Is it all trees that you see, or can you actually see a forest? Yeah, Marcia says, yeah, 125. Yeah, sure. But I think a trader would have more conviction if they have this set up ahead of time, right, mentally, and then you're dropping into a 1 hour or 4 hour and trying to catch the cycles, and, right? Because at this point, it'd be nice if it did retrace so someone could buy it again. So on the smaller time frame, you probably have it set like this, right? And you're waiting for the exact same thing to set up here now on a 1 hour. Exactly the same as the day. Yeah, or it makes it go into the daily. The 786 is quite a pullback and can predict a top. Okay, and notice how the fib on the hour that I just did gives you a 2618, which is equal to that same level. So would this area be important in the future? Yeah, probably. Yeah. Yeah. Alan, try support at tradersway.com. Yeah. Okay. What else is going on from the point of view of pivots? Look at that, huh? Up, down, gone. Notice two things here because I've done a lot of swing trading. How many people have been practicing their swing trading based on the lessons I've been providing? You notice that it gapped at the 618 and retraced off the 382? Right? What are the basics again? The basics is you look at yesterday's low, yesterday's high, yesterday's close. We'd actually divide by 3 where the central pivot is. This shows me right off the bat, today's central pivot's going to be higher than yesterday's central pivot. Fine. But in the context of a swing, we're just suggesting that what happens today will be a lot like what happens yesterday. Now, of course, we know that that's not always true. All right? If yesterday was partly cloudy, today might rain. Sure. But it shouldn't be radically different, but it could. But this, in the context of the swing, you want the trend to continue. Now, if it was moving sideways, we probably would have opened low, went high, and closed low, or it lay a high, low, middle, and nothing changes. But when you're looking at it from a swing trade point of view, it opened low, it made a high, and closed high. So what does the swing trader do? Somewhere between the 382 and 618 Fibonacci retracements, you buy. Okay? You should have known this on Friday. You should have known this on Saturday. You should have known this on Sunday, right? And then as the market opens, you should be ready. Coincidence that it gapped all the way down to exactly 61.8%? You think that's a coincidence? Or do you think there was a ton of orders sitting right there where the market plummeted and slammed into $100 billion worth of trades sitting at the 618? What do you think? I mean, it was enough to reverse a collapsing market, wasn't it? So Igor says, oh, he knew it, but his calculations were different, blah, 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 wah, 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 right? Because it did pull back 3A2 as well. So on and so forth, right? But isn't that remarkable that even in a crazy market with giant gaps, clearly some sort of chaos going on over the weekend, and yet the entire USD yen market, right? The US dollar and the Japanese yen represents the two largest and mature bond markets on the planet. It's an incredibly important currency pair, guys. It's a huge percentage of the overall global foreign exchange market. And this thing, no joke, probably required hundreds of billions of dollars to reverse. And it reversed it at precisely 61.8, not 62, not 60 something, not 66, not 60. I mean, holy crap. That's a lot of money. So what, you know, obviously I'm exaggerating for effect, but no, that's the truth is the truth, right? So if it did require hundreds of billions of dollars, doesn't that give you sort of like proof, if you will, that market participants have orders at levels like this? That what I'm teaching you is used by hedge funds, for example, and that they're sitting there waiting there with just orders. They're just there ready to go, right? That someone said, this is a bullish market, I want to buy the dip, and put in a bunch of orders down there. I mean, I'm trying to get into your brains, guys. Because if it's in your brain, you will change your behavior if you honestly believe that. Right? I believe, brother. Brother Wayne. Okay. All right, so let's get going on the fundies. This information is available at forex.today. News, COT report is where we'll start. Oh, thank you for sharing. Looks like a few people have shared. Very nice. All right, commitment of traders reports. Let me get my drawing tool out. Oh, toodles. Hot dog, hot diggity dog. All right, here we go. Yeah. So you know the clubhouse, huh? Yeah, I just actually, my kids are older now, right? They're young adults. They're 8 and 9. And we had a 2-year-old over at the house recently. And I said, oh, I know what to do. And I go to YouTube and I pull up the Mickey Mouse Clubhouse song, pull up the hot dog dance, and my kids are like, "What is this?" I'm like, "Oh my gosh, you don't remember this? When you were 2 and when you were 3, we'd watch Mickey Mouse Clubhouse for 3 hours straight, and at the end of every single episode, they played the hot dog dance, and I would turn the music up as loud as my speakers would go with the subwoofers and everything, and we would dance around the house, and we'd dance on the couch, and we'd get tambourines and banging sticks together and drums, and we'd march around the house and dance to the hot dog song over and every time. If I was in the kitchen cooking, I'd drop everything and run out and dance with you. No, I don't remember that, Dad. Oh, well, that was great. Now I realize none of it mattered. Hey, how about that $20,000 I spent on the Disney cruise? Remember that? No, don't remember that. No, don't remember any of it. Oh, snap. Not important. So if you're a new father, my advice to you is don't spend a penny, don't buy any presents, don't go on any vacations until they're 8 or 9. It's all a waste. You're only doing it for yourself. I mean it. Don't buy them birthday presents, Christmas presents. Don't worry about it. Don't worry about it. All right, got my drawing tool. Let's go. Oh, dog, diggity dog. At least I felt like a good dad at the time. I mean, what kind of dad dances to the hot dog song every time it comes on, no matter if it's the 15th time for the day? Who dances with their young children? What a waste. Hopefully they grow up to be great children. I think they will. They will be fantastic adults. I'm sure it'll prevent them from being serial killers one day, right? All right, let's do the commitment of traders report. This is Euro, and what we're looking at first are the long positions. Then the short positions. Change, and the net. Nothing. Yeah, John, I guess so, huh? Yeah, I took my daughter on the. Yeah, what happens? There's a special night, and all the Disney princesses, come out to the main lobby, and I'm one of the VIPs. So you get you get the VIP line and everything. You just go straight right up there, and all the other guys have to wait for an hour and a half to get pictures with the Disney princesses. And I take my daughter. I'm like, this is awesome. Every single princess. Look, there's Snow White, and look, there's Cinderella. I take my daughter up there, and she cries. She's scared of them. uh, and I don't trust Peter Pan, let me just say that. So it just didn't work out the way I thought. I'm like, oh my God, we're going to meet every single Disney princess. My daughter's like 2 or 3. It's going to be a dream come true. She's seen every movie. Yeah, money well spent. Let it go, let it go. All right, let me get a different drawing tool here, different color. Yeah, don't turn your back on Peter Pan, Wyatt. All right, so here we go. British pound obviously has been a pretty good mover lately. Longs, what? Shorts, oh, just less people trading it, huh? That seems to be summer to me, right? Boy, it's surprising. But we're just losing volume is all that's happening, right? That's it. just losing volume. Now, also notice this is before the big move. So I guess next week we'll see how important this is, and also was it getting out of their shorts and into longs? You know, like is it a double whammy? You know, so we'll see. I think that'll be interesting news to come. This might just be showing the locked up market before the Greek vote. And look at that, same sort of thing. This is all old data. Now remember, this is it's old enough that it's not reflecting a lot of the moves that have occurred recently. So I'm just going to speed up through this because yeah, like I said, it's old. So you know, we see this where that's people getting out of their short positions, but we know it's like this now, right? But what we'll learn next week is to the degree the market has shifted. Is it people short the Japanese yen? Or is it people getting out of the longs that when they were, you know, when they were long Japanese yen? Or is it both? And now, of course, both is the perfect storm. This is that move on Aussie. Finally got through, got to 74. The key level obviously was 75. That was really important. How many people are short Aussie dollar? Well, there's a pretty significant increase. How many long? No increase. So that's actually people getting short. What I'd like to see is a decrease in the longs. So there's still quite a few people in the market that are long Aussie versus US dollar. And if they drop out, then we go to 70. Okay. So not everybody is short Aussie dollar yet. So there's room for it to move. Kiwi? No change in shorts. And a lot of people got out of their long positions. And it's still falling fast and furiously. There's the trend. Heavily net short Kiwi. Okay. Come on, drawing tool. All right. Definitely net short. Increase in long positions? Yes, some. Increase in short positions? A lot more. It's a confused market, isn't it? Because there were are buyers of the Canadian dollar. There's just a lot more sellers. So what happens if we can get these buyers to get out? Because they're losing so much money, they cut. They just cut out of the trade. Then again, then you have a perfect storm in Canadian dollar, even better, weakens even more. Cool, let's go over the calendar, news, calendar. Filter the sucker out. Let's triple star it. Samsung, right? Doesn't Samsung mean 3 stars in Korean? Mitsubishi means 3 diamonds. How about Stella Artois? All right. Hide filter. All right. Going through the week. Boom, ba, 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 ba. Let's see. Pig CPI up. Pay attention because we want to know if the BOE is going to raise interest rates this year. Core retail sales, yeah, important, but not the most important thing going on this week. So I'm just going to do the most important ones. Chinese GDP and industrial production. Yup. OJ press conference. Yup. Bank of Canada policy report and interest rate statements. Yup. Okay. Hang on, I got to scroll down. It's such an important week. And then I don't know about this one. I know Yellen's speaking here. I forget what. I guess I could click on it, but I forget where that is. But well, maybe it's the way that the calendar writes it. I think Yellen is doing a speech somewhere, but this is the testimony, isn't it? Blah blah blah. Blah. What? It's funny. I think that's the testimony. It's her testimony, right? To Congress and the Senate. Yeah. Congressional testimony. It's not labeled as such, but okay. Now, I think she is speaking before that, but the funny thing about this is she reads the same speech twice, and then there's a Q&A. What I never understood is why can't they just skip to the chase and on the second day just go right into Q&A? By the way, if you want to be frightened, you should actually watch these testimonies. Listen to every question. And you'll say, wow, Janet Yellen's really smart, and the people in the government are quite stupid. And you'll be baffled that those idiots are running the country. And you'll say, holy smokes. Holy smokes. You'll be shocked at who runs our country. So go ahead and watch those. I think, like I said, I think it'd be like a nightmare, right? No, you'll be just shocked at the grandstanding, right? They'll ask Janet Yellen questions about, you know, the single mother that's underemployed, and she's like, that's your constituency, but it's not my problem. I'm the head of the Federal Reserve. And they won't even ask a question to her. They'll just state whatever they want to state, and it probably has nothing to do with what Janet Yellen does. I mean, it's just amazing. So anyways, so going into that, so yeah, so we got the UK stuff up there first, whatever. Retail sales, fine. But yeah, go Chinese GDP and industrial production, the BOJ press conference, all very good. Canada interest rate decision, very good. The interest rate, no, ECB, obviously, that's the press conference. We don't care about the interest rate decision. What we care about is two things. What he says about Greece, which probably won't be a lot, but whatever. And then the second thing is, are they going to add to quantitative easing? Now remember, they're already changing collateral, which might be the precursor of more quantitative easing. Because remember, the euro has been more up lately than down, and that's not what quantitative easing is supposed to be doing. So he spent all this money so far, and the euro is up 1,000 pips off from the bottom. So it might, you know, so, and he's been greasing the skids for maybe a little more QE. So I'd like to see a hint about that on Wednesday. Okay. Obviously, the testimony, this testimony is supremely important for the value of the U.S. dollar. Carney's going to speak this week. And some more nice, you know, CPI out of the U.S. Great. There's obviously lots of inflation data coming out around the world, so lots of CPI. That's always going to be good. Some retail sales stuff, various countries, very, very, very good. But look at the central banking stuff, right? Governor Carney, yes. Yellen, yes. So on and so forth, right? Very, 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 very good trading week, guys. Very good trading week. We've been blessed. Thank you, Forex gods. Should be a lot to do this week. Okay? I mean, all of this clearly is important. And right? I mean, all of it. I mean, I'm skipping over things like U.S. retail sales, PPI, and CPI. Didn't even mention those. Those are all important as well. It's just they're overshadowed by even the bigger stuff. So when a central banker sits down to ask questions, it's an opportunity for market participants to learn about how they should position themselves in their portfolios. So a very important week because we got a lot of important central banks speaking. You know, for example, the Chinese industrial production and GDP stuff is for sure going to move Aussie and CAD one way or the other, and particularly Aussie. So be ready for that. So very good. We'll do a quick around the world, and then since it's summer, we'll call it a day. Okay, there's our USD CAD that we've been set up for months, still moving along. Has it made a lower low yet? Should I change my strategy? No, we're good, right? Very nice. Okay, I wouldn't buy it. And you could set it up for a sell. You could. Just be careful that you know what you're doing. Hasn't made a low yet, but it could. Oh yeah, all this got flipped around. Pound yen we've done. USD yen we've done. USD CAD no change. Euro USD. I guess we can take another look at that one. Let me zoom in. Remember, I was cautious last week because we're not at a high and we're not at a low, and we're not really. I mean, we're just consolidating more and more. Fundamentally, I'm a bear, and I believe you know that. So, in that case, what I'd like to see is a low retracement and down, and then eventually a break out of the wedge, if you want to call it a wedge, and continuation. Okay? Right now, I think the USDN trade much more straightforward technical analysis-wise than Euro USD. Okay, so I'm very excited about USD yen. I'm okay with what's going on with Euro, but there's so many new shocks, right, that it doesn't necessarily behave the way it's supposed to. So that's that. Gold. Any reason to be buying gold? No. Still none. Gold support became resistance again. Very, very straightforward stuff price action wise. This will be an interesting consolidation area. It'll be interesting to see what happens around here. 1155. The actual bottom is lower. Okay. I think we could get something like this week. Okay. If we don't get that, then we'll just be kind of in a sideways between 111 and 112 for forever. Honestly, it could be for a very, very long time. So we'll see if this will continue its trend. But right, basic price action, right? Big drop, lower high, lower low, retracement, right? Back to the roll reversal, lower low, retracement, back to the roll reversal. So maybe a lower low. I mean, that kind of looks like trending, right? So no reason to change the strategy quite yet. Stay short. Or look to get short. Or add another short. Oil prices still continuing as planned months in advance. Love it. Isn't it amazing how it does this? And you'll read the Wall Street Journal that like, oh, that has to do with blah, 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 blah. And they'll talk about OPEC and they'll talk about, this, that, or the other thing and the shale and the frack this and frack that and frack you. And I'll say, well, no, I just made a 3A2. I don't know. But they always come up with a reason. That's why you need to stop listening to analysts, because they always have a clever reason after the fact. We had it set up for weeks and months before the fact. And very often it's amazing how news occurs to create the inevitable according to technical analysis. Now, technical analysis is a self-fulfilling prophecy, but whatever, right? But whatever. So at least it made a lower low very interesting. Now, I think someone will buy it at some point, even just to prop up the market, right? That's fine. So we still got to watch these areas, because I've always been clear, when we're up at this 382, I'm just saying not up. But I'm not also saying that it's going to go down to 13 like the fib would suggest. It's going to go down to $13 a barrel. Well, it was $13 a barrel in 1972. Okay. So we're not going to go down to 1972 levels. By the way, in 1972, that was after the Iran crisis, the OPEC shortage and stuff like that. And oil was $3 a barrel, and it skyrocketed to $12 a barrel. 400% increase. Heading down there. All right, so at some point, I do believe it'll stabilize. Right in here, probably, right? Is the guess. And then we'll cycle it up. It could go higher. Maybe this time it'll go to 75. But we'll stabilize around $60. Right? $60 is cheap enough for the country to function profitably, but it's also enough to sell oil, and I think the Saudis will be happy at 60, and the frackers are happy at 60, and all that kind of stuff. Could it double bottom and go all the way down to 44? Yeah, 44 sounds pretty low to me, though, doesn't it? Doesn't it to you? Like, how do we break through 50? I think 50 is the barrier. And let's say the equilibrium price in the marketplace is probably 60. So if the low side is 50-ish and the high side is maybe, I don't know, even more like, this is 70 here. So, being caught between 50 and 70 for the next 2 years, I wouldn't be shocked by that at all. Okay? So I'd be careful. Just answer these basic questions when you're creating your strategy. Do you think oil is going to go to $35 a barrel? What would create such fundamental change? China would have to completely go offline. The value of the dollar would have to skyrocket, because this is priced at $1, so $1 would need to buy a lot of oil. That's another way of looking at it. Yes, well, yeah, some sort of geopolitical, but that tends to push up prices. So it's not. It shouldn't be a supply issue. Okay, it should be a demand issue. So it'd be like the eurozone getting killed by a Greek exit. Let's say. Let's say Greece is kicked out. Whatever. But then quantitative easing would probably be added to the mark, and that would stimulate the idea of future growth and should stabilize things. So, you know, like we could debate what would need to be what would need to happen for it to head down, but then also the central bank's response to these situations would therefore be the consequence, and then the future pricing or the forward pricing of these commodities would then be impacted and then reflected in the market. So if it didn't drop that quickly, I think it would come back just as quickly. So that's what I'm suggesting. I don't think there is a scenario that we go down to $35 a barrel. That we're not going to break this 45 area as well, okay? That this is the floor. The change here was the fracking, but we got all that priced in. Quantitative easing to save Europe, which will, once Europe gets online, that'll save China. When China's online, then it's going to save Australia and Canada and all that kind of stuff. So everything that needs to happen is happening. So, you know, I think we'll kind of be in this world for a while. And that the market, many market participants want it to go up. But then when it goes up, there are many now, and specifically the frackers in the United States, that would simply just add to supply. And within 30 days of price going up, price will come right back down. Okay? Okay? So that's kind of what I'm thinking. Okay? I'm just kind of walking you through my thought process. Remember, I don't know what oil is going to be valued at tomorrow or next week or next year, but since we're on a team, we can talk it out intellectually, right? So that seems the most reasonable scenario so far. I don't think it'll go up much. I don't think it'll go down much, but I think we'll get some nice trades out of it. So happy summer. We'll call it a day. Only 1 hour webinar today. So peace on earth. May the pips be with you. May your profits be above average. Thank you for being a client of TradersWay. Thank you to Forex.today for hosting. If you're watching this video on the website or if you're watching the video on YouTube, please leave a comment. Please leave a like. Please share. It's appreciated. So once again, thank you for being on my team. You keep me sharp. You keep me focused. Even on the summer, I want to be pretty for you. You make me want to be. So thanks a lot. See you tomorrow. Cheers.